Welcome to today's GC Advantage webinar, the General Counsel's role in private company growth at each development stage. My name is Bob Barker, and thanks for joining us today. We're fortunate to have Jamey Seely, one of the BarkerGilmore senior advisors, join us, who is also the GC of Crusoe Energy Systems, who will be leading our discussion. And with her will be Jason Lynch, General Counsel and Chief Operating Officer of Foundry Group, venture capital firm. Just for a quick overview on BarkerGilmore, if you're not familiar. So we really help clients recruit, develop, and optimize their legal and compliance departments. That includes recruiting GCs, any lawyer who reports into the GC, as well as CCOs. And we also provided coaching, mentoring, and advising to accelerate success. And that's an area that Jamey is an expert in. And so really it's about unlocking leadership potential and unleashing organizational success. The GC Advantage program, it's our professional development program for corporate legal and compliance leaders. Provides an opportunity for you to interact with GCs, CCOs, chief operating officers, board members, and search consultants, for different events, and really to help you advance your career. Today's webinar is being recorded, and an email will be sent to everyone who's registered once the material is available on the website. We also have all of these webinars recorded, so you can go onto our on-demand webinar section to get those video recordings, as well as download a podcast. The next GC Advantage webinar that we have is going to be about General Counsel's guide to succession planning. So we have a number of individuals that are going to be joining us for that. So mark your calendars or sign up if you haven't already. We also, during the session today, we encourage you to submit your questions, on the Zoom application, and there is the opportunity for you to see what questions have already been submitted. So if you have a similar question, you can just click the thumbs up icon. That way the panelists will know that is a particular topic of interest. And we'll do our best to answer as many of these questions that come in during today's session. At this point, I'll turn it over to Jamey, and then I'll be back at the end of today's program.
Okay.
Thanks, Jamey.
Fantastic. Thanks, Bob. So I'm Jamey Seely. As Bob mentioned, I'm a senior advisor with BarkerGilmore, and also the General Counsel of Crusoe Energy. Just so you have a little bit of my background, I started as a corporate security lawyer with Thompson & Knight, which is now Holland & Knight. And I've been a GC of mostly public companies now for over 20 years. So that's where I'll be speaking from in terms of most of my experience comes from that 20 years of in-house speaking. And Jason, I'll let you talk about yourself and Foundry, and then we can just jump into it.
Thanks. Great to be here today. I'm Jason Lynch. I've also been practicing for a bit more than 20 years now, less in-house than Jamey. For the first 16 years of my career, I worked in private practice as a business trial lawyer. I started my career at Wachtell Lipton in New York. Most recently, I was a partner at a firm in Denver called Davis Graham & Stubbs. When about 6 years ago, one of my clients, Foundry Group, decided to hire its first general counsel. And somehow I found myself in the job. Foundry is a venture capital firm. We have about $4.5 billion in assets under management from institutional investors like endowments, pension funds, and the like. We're investors in early stage technology companies. We have a portfolio of about 80 companies today, and they span the business life cycle. Some are just newly formed businesses with some founders and early employees trying to build a compelling product. Others have found product market fit and are growing into large businesses. And others are pre-IPO or post-IPO companies who have really scaled and are now national or global businesses. So that's my background.
Thanks, Jason. Okay, well, let's dive into it. And Jason, I'm going to tee this first one up for you to kind of take the lead on, and then I'll jump in. But our first topic we want to talk about is, when a company needs its first GC. And Jason, you sit, as GC of the VC company that's investing in these companies. So I know that you are the one who often gets the call from the CEO or the CFO who's never had an in-house, lawyer as part of their team and may or may not have worked with one before. So tell me how you kind of coach them through that call and help them make that decision of, when do they need one and who do they need to start off with? Yeah,
it's interesting. I do a lot of coaching and advising in this arena because for company founders in early stage companies, and let's say, let's call that companies with $0 to $10 million in revenue. The founders and the business team, the C-suite at that stage, often has very little experience working with lawyers. Their experience in my world and kind of the technology sector is they've had a relationship with an outside law firm that's helped them raise their initial rounds of equity capital. But a lawyer is not part of the team, and a lawyer is not typically one of the founders. And what I find is that the first moment when the management team's attention is taken from survival, building a product, executing on a vision, and asking themselves, hey, wait a minute, do we need a lawyer around here? Yeah. The first impulse is typically, is there something we're leaning on our outside counsel for that we can replace with an in-house attorney? And in the technology world, that is typically commercial contracting. That is for, say, a B2B SaaS company, for example. Commercial contracts are what generate revenue for them, and they're typically relying on outside counsel in the early days. Or you're in a very IP-heavy business. So a lot of times it's not a GC that is the logical first hire. It's a more functional attorney that can bring an essential business process in-house. So that's what I often see. What I often have conversations about, though, is asking business teams to really identify in a clear way the need, because it takes a while. I think it needs a little bit more growth before the need becomes, I need a strategic partner on the senior management team with the legal discipline, which I think of as more of the GC role. That usually comes to the second step.
Yeah, I think that's a great point, Jason. Sorry, I didn't mean to.
No, I was going to say, we actually already have a question.
Oh, perfect.
Because in the context of early stage companies, what do you think of the lawyers who pitch themselves as hybrid business person lawyer who can get involved earlier than you might hire a pure GC, but who can move into that role when the company needs that? I mean, it's interesting, right? Like in early stage companies, lots of people do lots of different things, and you can find that responsibility is blurred, and I can see an efficiency in that. But I would say that the life of an early stage company is so dynamic. The initial plan is never the end plan. The challenges the business faces are numerous and unexpected and push in different directions. That it'd be very hard, in my opinion, to sort of start with someone who's a multiplayer. I'm a business person and a lawyer, and I'm clearly going to evolve into the full-time lawyer eventually. I would find that unlikely to be the way things play out. Which doesn't mean it's not a bad idea to have someone with a little bit of legal sense on the team, even if they're not formally playing the lawyer role.
Yeah, I think what the business team most often wants is a lawyer who thinks like a business person, because at that early stage, you just have to be so incredibly pragmatic in a way that, I remember making that shift from being in a law firm and, everything I was used to doing and writing long memos on things. And then, you're sitting next door to a CEO who, comes over and asks a question. He wants the answer when he comes and asks it. He doesn't want to, 3 days later, you give him a memo on it.
Yeah.
And he certainly doesn't want to read it. So I think that whole practical part is really what I would say is the focus. If you're trying to think about, how do you really help, a small and growing company, is just how do you be really pragmatic for them and help them through those growth cycles, for sure.
Yeah, I like to say that especially in these early stage companies, that you need to have a bias to yes.
Yeah.
That the difference between the role I played as a litigator and outside lawyer, it was, give the exactly right answer to a client question, having processed every conceivable risk and opportunity. And you've got kind of one shot, whereas, iteratively in-house, you need to be not the stereotypical lawyer impediment to things that we've all heard so much about, but biasing to yes, for sure. And I think one of the challenges at this early stage, because then we'll move into growth stage in a second, is, with the question you started with, Jamey, is often the first conception of the legal function is this very operational, legal, technical need, right? My revenue comes from commercial contracts. I need a lawyer to execute those. I want that person on my team. I am an IP or patent heavy business, and I want an IP professional on the team to handle that legal technical thing, right? But my conception of the most valuable general counsel, though, is someone who is a trusted guide to the board and to the management team. And conceiving of the GC or the legal department's role like that typically comes later, right after the company is a bit more mature and is starting to, experience legal needs that are not just legal technical execution processes.
Yeah, and I think actually that's probably, Jason, a perfect segue into that second topic of, how do you sort of add the most value there? Because I think the big challenge that whether you're a one person, lawyer in a smaller, or you have there's a small group, is that, your business team is not really used to working with an in-house group. It's just, it's a new thing for them.
Yeah.
9 times out of 10. And what they're used to is I call when I need something. So, you can get really pegged into a very tactical, I need you to do this, just functional role.
Yeah.
And it can lose all of its strategic importance, and actually just be very hard to accomplish what you want to accomplish because you haven't had that strategic input into things.
Absolutely. And it's a hiring challenge. Even if you have a management team that conceives of the usefulness and power of the legal department as a strategic partner to the business, even if you have that, in this early stage to growth stage, like let's say you've hit $10 million from revenue and you start to have the resources to build out an administrative or management team, to hire the GC as someone who has that kind of those strategic chops, you're often hiring early, right? Like you're hiring someone even before the business fully needs that capacity, if you're forward thinking. And if you're not forward thinking, you've put someone in that role who frankly is going to be outpaced by the business growth within a couple of years because they don't have the chops necessarily for that role. So it's a difficult balance. One thing I thought I might throw in here is I pulled a little data before we jumped on there.
We love data.
Yeah, there was a survey done of private technology companies. This is just 3 or 4 months old from a group that I'm a part of called Tech GC. It was an internal survey. And they asked people just, what is the size of your legal department by revenue? And so the revenue categories were 1 million to 10 million. The average size of that legal department is one person. 10 million to 25 million, it's still one person. And again, with my experience, that one person probably doesn't have the title GC yet. That's probably corporate counsel or, something like that, probably. From 25 to 50 million, the average becomes 2. 50 million to 100 million is 4 people. $150 to $250 million in revenue, 6 people. 250 to 500 million, 7 people. 500 to 750, 13 people, and 750 to $1 billion in revenue, 26 people. So that's just some interesting data. That, by the way, does not include full-time compliance employees. It's just people defined as legal department, with compliance being conceived of as differently in that survey.
Yeah, well, that really kind of shows you the challenge at the early stage.
So Jamey, let me ask you, when in the companies you've been a part of, what was the threshold that you were experiencing inside business when you felt, oh, it's time to grow the legal department? What were the things you were experiencing in the business that were pushing you to grow the legal team?
Yeah, so most of my companies have been very, very high growth. So what I typically watch in those high growth environments is I look at how fast is the revenue growing, because you want to sort of be somewhat, I want to somewhat be behind that, but not too far. I look at what my external spend is and where is that external spend. I look at my risks. So, regardless of whether or not I'm spending money on it, where is the business really complex and may, and we may have the issue of not seeing around corners that we want to see around corners, like employment law is a really good aspect of that. Like, we might not spend a ton on that, but as you grow in complexity, that's an area where you may have risks that you just, kind of can sneak up on you. So I look at all of those factors, and then I'll always come to the founders or the leader of the company with, a multi-stage plan. And usually my first stage looks something like, all right, we're growing super fast. I don't have time for specialists. Like I need somebody who can handle a ton of different things coming from this, from every angle that the business is growing at, especially from a growth and development perspective. So that can be like an M&A corporate lawyer who just has a great breadth of experience. There's now this category of lawyers that, is out there that are called tech lawyers. Like a tech lawyer is, depending on the business, is often super, super helpful from a build out stage. And then I'll usually present a plan to our CEOs that talks about, okay, well, when we do start getting to those, where you're talking about, 4 people and 6 people, Jason, in that survey, and then all the way up to the 26, then we'll start kind of layering specialists in. And that becomes almost more of a risk calculus versus oh my gosh, I need people to cover large volumes of work, because otherwise the growth slows down.
Mm-hmm.
So I really look at it from all of those angles, and they change over time, because business really changes over time, and what you need to, the corners you need to see around change over time.
What are some things, Jamey, you've done in your career to help create the role and define the role of the legal department of the GC as a real strategic partner with the business, and not just, I don't want to demean it, right? It's important. Yeah. The technical legal execution tasks of the legal department are essential for the business, but growing in stature too, to be that strategic partner. What are things you've done or seen as being successful tactics?
I think a couple of things, and I'll give you some really practical things. Like, one thing is the attitude with which you go in. Just if you don't have that mindset you were talking about that tendency towards yes, it's very hard for anyone to want to include you in any meeting, because they're going to see you as as creating hurdles, and they're going to see you as not value additive. So you got to really, really have that. But I think an easy hack for somebody new in the role is, the first thing I do when I go in is say, show me your schedule of meetings. And I'll attend a fairly large number of them at first, and then I'll reduce the number of meetings I go to. But why that's a great hack is because what you really need is, you need to be involved early in the decision-making with giving positive advice for how to make the deals better, or lower risk or help the business on those. And if you're not in those meetings, you can't do that. And oftentimes they just don't know to add you. It's completely just we can, that just, that's the difference between going in but to a really highly defined public company and a private company that's relatively new. It's just, everyone's trying to figure out things and it's moving so fast that oftentimes they don't have time to think about, maybe we should have included legal on that. You'll get kind of pushed to the end of just execution, which really limits your ability to be strategic. So I'd say like the best hack is really just figure out the meetings. Maybe you have to attend more than you want to at first, but it's a really, really easy way to start to figure out, where you want to be. And then the other thing I do is I will periodically, especially in high growth, meet with the CEO and president, my CFO, and then my head of business development, because BD knows things 2 years before they ever realistically get to my desk, because they know all the ideas that they are really working on. So I love to find out the ideas for them and then really try to understand the business well enough to really give them good business and legal feedback on it.
Jay, we got one follow-up question to something you said, talking about meetings. Someone asked sales meetings or other meetings, and it sounded to me like you kind of view it as a comprehensive, maybe any corner of the company potentially.
Yeah, I do it as comprehensive at first. I mean, sales meetings are a little bit more challenging, like the business team. You don't want to be in a third party meeting, right? But the internal meetings, yes. So like if your BD is sales, then you probably want to know what they're selling, because then you're going to know, how do my contracts need to evolve? How do I help them make sure there's security that's appropriate for the contracts? So yeah, I'd even go down to the sales level. And then again, you can back out as they know you and start to engage you more. Yeah.
We had another question. Someone says, how do you manage expectations when the company has used outside counsel, but up until your arrival have not had any significant regulatory issues or lawsuits? Sticker shock of legal fees. It's interesting. In my world, sticker shock of legal fees is actually the thing that first motivates the creation of an independent legal department, right? So in venture-backed technology startups in the earliest stage, there's outside counsel on the scene who were typically handling the Series A, B financings, for example. But the companies don't feel their fees because oftentimes, at least in the big tech-oriented Silicon Valley firms, they tend to get paid at the financings. So a flush of money is coming in, legal invoice is getting paid in the wash. The management team isn't really feeling that. And it's not until someone picks their head up a year or two later and says, hey, wait a minute, we're paying $150,000 a year in legal fees on commercial contracts. Does that make sense? That's often the thing that pushes the first hire.
And that's actually my experience as well, Jason, is it's often a really big, they see the internal spend growing, and that's what actually triggers. And then I think the question is, how do you handle it once you're inside? And I'd say I'd break that question into two parts. There's the day-to-day, and then there's litigation. To me, litigation is just a separate thing. For the day-to-day, you can't do everything at once. So yeah, there's probably, a top 10 list of compliance things you'd like to add, but you can't do those day one. So figure out what those are, come up with a very specific budget for each one, and then I roll them in as the business starts to get more legs and more able to support the cost. Litigation is very tough for small businesses. It's often the first time they've ever seen it. So when you do litigation budgets, you have to kind of be prepared for a certain amount of shock and awe that they're going to experience. So I do my litigation budgets where I say, look, you need to understand now that you're in this, here's what the life of this can cost. And that's a difficult number, but they need to hear it. And then I break it down more simply and say, but we're not going to budget for the whole thing because that never makes sense. Let's budget for 1 year. and I'll give them a 1-year budget, and then I'll say, and let's look at it quarterly. That way no one's like surprised when, over time, those litigation bills do add up, but it breaks it down and makes it more digestible too.
Yeah. And I find in coaching management teams in our portfolio companies, when they're engaging lawyers for significant projects that have real budgets attached to them, they're so inexperienced, a lot of times they're just very passive. They're just like, oh, I just kind of have to take this, as opposed to being like, you know what, you can have a negotiation with your counsel. This isn't, you need to engage in a real substantive way over the service they're going to provide, the need you have, what it should cost. And by the way, you've got more than one option. You don't have to just sort of take it. And I find one of the things I spend a fair bit of time doing is coaching management teams to sort of empower them to exert more control over the relationships they have with counsel. Now, when they finally get to a stage of having a GC, right, that's a role we're playing as GCs, where we have that expertise and we know how to carry that burden.
Sure.
One question that just showed up is the VC investor or the portfolio company typically the first to push the idea of hiring an executive/strategic partner level internal counsel? In my experience, and this could be stylistic to Foundry, it comes from the company, where we defer to our management teams. We're not unlike private equity, which typically will have a substantial amount of internal control over what's happening in a business. That's not the model at venture. And so we're letting the company come to that realization on its own, typically.
Yeah, that's very, I have a very similar answer, Jason. I think it's mostly the internal company starts to feel like they need more.
Here's a question for you, Jamey. When you're evaluating fairly undefined opportunities as the first lawyer in one of these tech companies, what are some best practices? Are any things like reporting structure or rationale for the hire inherently red flags? If part of the posture of that question might be, Jamey, like if you were contemplating joining one of these companies in that role, how would you think about it? What kind of diligence would you do for yourself before joining one of these earlier stage companies as maybe lawyer number one?
Yeah, I think that's a good question. Let's maybe just take it from that angle, because I think that's a really important one. So if you're the first person going in, I think there's really 2 or 3 key questions. One is, you're investing your career in this company for a chunk of time. So you should come into it with the mindset of an investor, like Jason and Foundry would. And you should ask a lot of those same questions. And if nothing else, you should definitely ask about runway and cash and growth plan. And all of those things need to be realistic, and you need to really make sure you're very comfortable with them, because you can have companies that are wildly successful, or you can have companies that look like they're going to be wildly successful and then it just doesn't quite work out. But if you think about it like an investor, and frankly, the CEOs and CFOs you talk to will appreciate that greatly, because that's how they think about it when they're continuing in building the company. Is they want somebody who wants to be an investor. So you'll be very aligned if you kind of come at it from that perspective. I think one thing I'm always very cautious about, it's more to the subtle nuances of that question, is just because I come inside doesn't mean you're going to have zero spend. So that's like one of my red flags, where if you're really just trying, if it's just such a penny pinching cost cutting thing that you're going to get me in, and then they're going to think there's absolutely zero spend about it, that's fairly unrealistic in most companies. You're still going to have some advice and some things that one person can't sort of logically cover. So I always like to ask, hey, what's your budget? Sometimes they have one, sometimes they don't, but it's a conversation starter to make sure you're going to come into a job where realistically you can get that expertise when you need it, because that's usually what you need at the first is you're going to know how to do most things, but you're going to have those times when you're like, oh, I have a complicated tax question and I shouldn't guess on this. I need to make sure there's budget to do those expert things when they come up.
I think that's good advice. And the only thing I would add to that is just in kicking the tires of an opportunity of a company like that at that stage, I just would not assume that the management team has a kind of thoughtful, comprehensive understanding of their legal need. And have they actually made the right decision to hire against the set of needs? And I would really explore that. One question just came in relatedly. Thoughts on reporting as the GC to CEO versus CFO, COO? I'll offer an opinion first and then see what you think. Let me say, I think, right, all of us as general counsel want to feel that we are important enough to be dealing directly with the CEO as who our supervisor is. I think that's probably something most of us probably would prefer. I see over the life cycle of private companies in our portfolio, a lot of times the first conception is that it is a report GC to CFO or COO. So I don't view that as some sort of red flag, say, in an early stage company. My own view is that as a company matures, is in growth stage, certainly pre-IPO stage, that if the GC is not reporting to the CEO, that to me reflects an institutional judgment about the strategic importance of that job, which is to say it's not as valued as it maybe should be. And there might be a whole bunch of reasons for that. It might be, the incumbent hasn't built the position to perform that role, so it's not perceived that way. It might be a bias or a blind spot on the part of the board or the CEO. But I would think that by the time you are a maturing company, certainly a pre-IPO, post-IPO company, I would hope and expect to see the GC report to CEO. What do you think?
Yeah, I think you couldn't have said it better in terms of hitting the nail on the head about it. It reflects this whether or not your role is going to be strategic. Now, I think same caveats as you'd like, not necessarily at the beginning level, right? That's just big companies, but certainly by the time you get to really close to IPO, and certainly when you're public, you should never be reporting to somebody else. Just again, an opinion, it sometimes works, but it often is a red flag that it's not viewed as a strategic role, which can make it really, really hard to just do a good job in there. But people try different things.
Yeah, I think part of that dynamic too that we haven't talked a lot about, and I want to ask you a question about, Jamey, is as the company is evolving, as the management team is evolving, I believe the board of directors is evolving too. And in the earliest days, in my world, for example, initially a board might be 3 people. It might be the 2 founders and a lead investor. Yeah. Maybe it's a 5-person board. You've got a couple of investors, a couple of founders, and an independent. But in the early days, that board, right, has a character and a flavor to it that reflects the early stage of those companies, right? There are directors who are opining about go-to-market strategy and product development and really foundational questions about the business. Once the company starts to mature and it's, M&A is part of its life, strategic partnerships are part of its life, it might be planning for an IPO, the character of that board tends to change a little bit, right? And you have people with maybe different experience sets, hopefully a lot more diversity on the board as you get to that stage. And so the GC as a counselor and a support and a guide to that cohort can feel a lot different than the earlier stage cohort. And so, right, back to the point about who you're reporting to, I would hope in those later stages, the GC is someone who has access to the board and the board is relying on, and you're not a couple layers down in the organization that stage.
Yeah, and I think that's actually a critical way that the GC role evolves over time is, in my public company, roles, I'm spending a tremendous amount of time with the board, because the board's actually just a bigger part of the company's governance. It's just more, there's just more time spent with the board, period. Whereas, when the company is still in the high growth and public, and private stage before it gets to that, I think board meetings can be a lot shorter. You don't quite have as much time that's happening as much of a governance related role, because you're really just looking at the growth aspects of the business and the financial aspects of the business versus once you get to that point where you're trying to layer in a lot of governance really quickly with committees and everything else. So
Jamey, when in your experience do you see the GC, like what are milestones in life of the company or the nature of the stage of a company where you would expect the GC to be engaging routinely with the board? And do you have any advice for how to think about your role as a board advisor, not just the in-house lawyer?
Yeah, I think that's a great time. I think anytime you start to have a fundraising and get to that next stage, so when you're like at a series B, series C, I think those are really big milestones for increasing the amount of time you spend with the board, because that's when you're changing how much you're talking to them about governance issues. And when you start having more governance, around, okay, what's your budget? What can you do that's outside the budget? When do you need to talk to the board about big projects? When does the board expect you to talk to, the company, to talk to them about big projects and get their approval? So really just kind of helping with that whole role of, how are we bringing the board into our business and making sure they're comfortable with the business? I think that really does increase over time as your risk and your financial spend increases.
Yeah, and one observation I'll make is there is in that before you've reached pre-IPO stage, and just as a roadmap for everyone, we plan to spend some time here in a few minutes talking about the pre-IPO role of GC here, but in that kind of growth stage, the pre-IPO stage,
right?
It can be a pretty risky time, particularly like moments right now, at least in the tech sector, which there are a lot of challenges, a lot of headwinds, a lot of business difficulty. You don't yet have boards that have the kind of muscle and experience around managing conflicts, fiduciary duties. You don't have a kind of seasoned public company board that knows a lot of the norms and guardrails around that stuff. And, frankly, one of the things I see often these days are boards that they almost structurally cannot make an independent board decision, because on the board are the CEO, who is a major stockholder founder, major investors who might be leading a financing that the company is about to do in a troubled environment that may have negative implications for other people's on the cap table. You've got kind of conflicts everywhere. And the business judgment rule is no refuge for the business that the board is doing in a lot of these contexts. So having enough confidence and also awareness to step in and help navigate those things, I think, is important, because I have found that outside counsel often, at least in the kind of tech universe, the startup mode, they're not oriented toward that stuff either. Like, they might be aware of it, but some do a better job than others of raising hands and saying, hey, everybody, we're in a difficult, tricky moment. Let's take a breath and walk carefully here.
Yeah, I think that's a really great comment, Jessica, because that is a really good place where, some good GC experience can kind of come in and add some value. And even from, an outside counsel perspective, I think you're very right about a lot of times, there's a hard line between private company counsel, and they do all of those fun transactions, and then, the lawyers we talk to after public.
Yeah.
But so one of the things that, strategically I've done in the past is when you're getting to that last round, think about actually transitioning then to the law firm that's going to be your IPO law firm. So you've got them in a little bit early. They understand business. So it's so valuable for them when you start coming to writing the box and everything on the IPO, but it's also valuable for you in terms of they start to notice the governance things that, otherwise wouldn't have been so transparent if you kind of stick with, the true, we're just going to do private company governance kind of process.
Well, that's a good pivot to let's talk about pre-IPO GC. I see the questions in the queue. I promise we will answer those, but let's just take the next 10 minutes though to be sure we cover this topic, which is, when a company is reaching that stage where it's thinking about an IPO, it's preparing for that. Does the GC have to have public experience? I get this question a lot from our portfolio as our companies are in that mode. Do we need to replace our GC who's lived with us as a private company with a quote public company GC? What do you think?
Yeah, so it's funny, you get that question a lot. I'd say when I coach lawyers, this is one of the most popular questions I get as well. I think there's a lot of factors around it. And I think the answer is sometimes. I know that's not satisfying. Let's put some parameters around sometimes. If you have a CEO who has never been the CEO of a public company, if you have a CFO who's never been the CFO of a public company, you are probably never going to pick a GC who's never been the GC of a public company. It's the board is just going to want some parameters around that. But I think most of the time, I think you can actually make a great argument either way. I think you can make a fantastic argument that the person with the subject matter expertise who really understands the day-to-day can evolve into a great GC. And what I usually coach people on is you need to be cognizant of your weaknesses. Your weakness as that is the board is going to be worried about governance and compliance and shareholder suits. And that's why a lot of times you see the boards bending towards, I only want an SEC experienced lawyer. And that's totally fine. If that's where your board is, then that's just their mindset. But I think a lot of times if you're going to try to convince them otherwise, you need to get them there. You need to bridge the gap on that. And the way you can bridge that gap a lot of different ways. Like you can have an assistant GC who's an SEC compliance expert, and that bridges the gap. That doesn't, I think, fill in the gaps of you're now going to be sitting in public company committee meetings that you've never sat in before.
Yeah.
And frankly, you can bridge that through an internal network, or like Barker has a perfect solution to that. They've got all these advisors who, we all come from big, public companies, and we can very, easily give you the inside baseball of that. And you can actually use that as a tool to sell yourself. So I usually coach people around, figure out what the weakness is. Like, what are they really worried about? Are they worried about, I just don't know if it's, shareholder suits or that sort of thing. And then and then think about how you bridge that, because it's not that there's never a way to bridge it. There's always a way to bridge it. It's just a matter of whether or not that group of people is going to be open to it.
Yeah, I sharing some experience from our portfolio, I'll get asked to participate in searches that our portfolio companies are doing, and to kind of sit in and be part of the management team helping to evaluate candidates, or even talk to the board about potential candidates. And we recently had a company that IPO'd in the last 16 months. They did, 12 months before that, they were asking themselves the question, do we have the right team members in place, not just legal, but CFO and other, to be public. And they asked me to be involved in their search. And one of the candidates, the GC had actually left. And so they had an open GC role. And the question was, hire a new person to take us to the IPO from outside the company, or can the number 2 person step up and play the role? And they were open to the internal person who did not have experience as a public company GC. And I said, my counsel to them was, listen, I don't think you should foreclose that. I don't think you have to have someone who's done that job before. I mean, it's a chicken and egg problem. If you could only have a GC who's been a public company GC as a private company, like there's a point at which there aren't going to be any companies who can go public. But I said that the key factor for me as a board member or as a management company in hiring that person who hasn't been there before is just, are they aware of the dimensions of life as a public company that are going to be new for the legal department? Because, right, all of us as GCs are generalists, right? None of us are experts in every aspect of the legal life of our companies. The essential judgment, in my view, is, do we each know when we have to go get the expertise, right? Are we aware enough? And so whether that's, you're going to have a law firm who's taken companies public before as your IPO counsel, right? You're going to have SEC regulatory resources, but you have to make sure you're aware of those blind spots and have a plan, a credible plan to become as fluent as possible in them. And if you have someone who's already wired that way, then I'd be like, hey, if they're a great lawyer and they've served you well and you trust them, then they'll be able to take care of that stuff.
Yeah. And I think to that point, Jason, I think, coming at it from that board investor level, I think the person they never want to hire is the one that says, no, I don't need to, I know everything I already need to know.
Yeah.
You know what I mean? Like that's a very off-putting stance if you're trying to win the day and get them, to agree that, you're the one who can make that next transition and leave, because it's just not a very self-aware, role.
We have let me see if I can knock off some. We've probably got 6 or 7 questions here that have piled up. Let me throw some out to see. First, GC versus CLO title, if you're the only lawyer. My reaction is CLO. I mean, to me, that implies a department. And so I would feel weird. I mean, look, at Foundry, I'm a legal department of one. And I would feel a little strange having the chief legal officer title as opposed to GC. But what do you think, Jamey, on that question?
I mean, listen, I come from I have a very personal view on that. I don't care.
Okay.
I'm the head lawyer. You can call me GC, you can call me CLO. I don't feel any different about my role if you call me CLO or GC. It's just, when 20 years ago, CLO didn't exist.
Right.
When I started being a GC. So I'm used to the GC title. I feel like that's a kind of a free thing. If you really want it, great, but I don't think anybody looks at them that differently, like from a resume perspective or otherwise. I think if you want to really have a big differentiator, I think the big differentiator is the difference between a GC and a global GC. Like, did you manage an international group or did you just manage a domestic group? Now, to me, that's a big differentiator because it's actually, but I don't see a big differentiator for that.
All right, here's a question.
Maybe a good question for Bob at the end.
Yeah, right. Bob, tell us what industry practices are here and your wrap up on that. Next question. What are the top 5 best practices or watchouts in the first 90 days for a new GC joining a company that's never had a GC before? One thing I would do on that, one of my 5 would be to circle up all existing outside counsel and on their own dime, go deep with you on all the work they've done for the company and just start there. Well, what has been the scope and depth of the outside legal work so far? That's one thing.
I think that's actually the number one thing. And it's usually the first thing I do is I meet with the outside lawyers and have them tell me about everything they've done and what they're doing. And, so and then I think the next thing is your contracts. You don't have anybody watching the contracts, so there's no assurance that they're fit for purpose. And that's going to be a very tactical, pragmatic thing in any business. And then when you get further down the list, I'd start looking at things like, okay, how complicated from an employment law is mine? Do I have, do I actually have a handbook, for example, or anything like that? But I would always start with contracts. And then, to your point about talking to outside counsel, one of the, I think the most important conversations I start having right away is CFO or your head of finance, because, you really need to understand, like, do you have financings? And are you going to accidentally trip over anything? Do you have covenants? Are you going to accidentally trip over covenants? Are they watching that? Are you watching that? So I think, and that's the one place where I always find that, in those conversations with the CFO, I'll find my easy foot faults. So, you just kind of can't have too many of those, I think, with your CFO really early on to kind of figure out that, okay, where could my problems be, and frankly, what am I going to have to renegotiate soon?
Yeah. And one thing at the early stage that is very common and people are very fluent in as lawyers usually at pre-IPO, IPO companies is I would make sure you have a feel for the audit dynamics. I mean, if you have an audit, if an audit has started, you don't need to be in the middle of it, but oftentimes the management teams and even finance teams of early stage companies or growth stage companies, they're new to the audit process, and being someone, and as a lawyer, you may be too, having a general understanding of that domain, I think, and being somewhat fluent in it is important to handle on.
Yeah, that's actually a great suggestion, Jason, because I sit and talk with we have a chief accounting officer who deals with our auditors. And so he and I sit all the time, and oftentimes I'm his backup for whether or not we have appropriate processes. But, if I didn't know that was coming, that would be really tough.
Yeah. Next question. Who do you recommend the GC rely on for guidance and mentoring? Peers, prior leaders, supervisors, industry advisors like BG or Gartner, law firms, combinations thereof, or all, etc. Well, let me say first, other GCs are kind of my highest quality mentoring network. And just, to use Jamey's example, right? We are physically in the same market, though we don't need to be. But we're part of a network of people in our community who are GCs, and I'll call Jamey all the time to bounce ideas off and get counsel. So that's one thing I would definitely do, is develop a network of peer GCs you can connect to for sure.
Yeah, I can't emphasize that strongly enough, Jason. I think that's something when I took my very first GC role, I sort of thought, I'm not sure I need this. And then, a month later, I was like, oh, I really need this.
Yeah.
And, it's just, it's such a nuanced role in terms of, the fact that you have to manage risk, but also, be an accelerant to growth. And that's challenging and best understood by other people in that same seat.
And then also, there are often some specialized groups too, right, that help organize that. So in my world, there's this organization, Tech GC. People can find it online. Its membership is solely general counsel in technology companies or tech venture capitals. I'm aware of, I'm going to blank on the name, Jamey, you might know it because maybe you're a part of it. I know there's a very high quality women's GC mentoring group. So anyway, be aware, right? There's networks like that out there.
Yeah, there are. And I think, Bob mentioned at the beginning that Barker also has, resources that you can tap to from a, coaching perspective or GCs. But yeah, if anyone who wants the women's one, email me afterwards and I'd be glad to track that down.
Right. We promised Bob we'd give him a few minutes at the end, and we got 3 questions left. So let's see if we can.
Okay. Speed round.
Is a CFO likely to let go of the GC CLO report once she or he has a relationship with that report? Who normally drives that change to a CEO report? Seems that it's a tough reporting structure to escape from, notwithstanding entity growth. I can certainly see there being a lot of internal politics around it.
Yeah, I think that's a fair point, that if you're in it, but that's a strange structure to IPO.
Yeah. And I think one argument I'd make, if you're the GC in that role, is so I have seen organizations where it's like almost dual reporting, right? There's some kind of relationship like that. But also, I do think the board dynamic is important. And I would make an argument for, kind of needing to be, closer to, in some sense, the strategic conversation that CEO is having with the board and in board mix. I think there's something about that that's meaningful.
Yeah, and I think there is actually an advantage, to that. I mean, you do need a really, like, I'm lockstep with my CFO all the time.
Yeah.
So it is actually good to have a relationship there that's really strong.
Could you speak as to trends and compensation for a startup company's first GC? So there's a bunch of data on this. The tech GC, for example, has a bunch of data, and there's something called the VCES survey that goes out. So there's surveys out there. I can't pull it off the top of my head, but if folks are on this call and they're looking for some guidance in that space, feel free to shoot me an email, lynch@foundry.vc, and I can maybe point you to some things.
Yeah, Barker has a survey you can get to
Okay.
that I actually use too. So we can punt that to Bob too.
All right.
This
Two
Bob-
more. In addition to the above question about recommendations for guidance and mentoring, can you recommend other resources for GCs to grow or aspiring GCs to grow into the GC Rule books, podcasts, other learning paths? Here's one thing I would do. And I did this for myself when I left private practice. I made a curriculum for myself with the stuff I didn't know. And I didn't have a magic bullet solution for where I would become conversant, fluent, or expert in those things, but I would rely on my outside counsel. I would try to find high quality CLEs. I'm a big fan of the PLI CLEs. There's a very high quality CLE provider. Couple of ideas there.
Yeah, I like PLI as well. I think that their quality is really, really good. I did the same thing. If you had to just pin me down to just one thing, ask for negative feedback from your colleagues. Everybody wants to hear the things that we're doing great, but that does you absolutely no good.
Yep.
Long term. I mean, you're already doing those things. So if you want to grow, you got to really ask those hard questions.
All right. So in the home stretch here, first, Wendy Williams, thank you for your comment. The Women's General Counsel Network. And someone else says ACC, of course, is great for education working. All right, last question. As a newer GC in an early stage company, just want to thank you. Okay, great. It's a comment, not a question. So I appreciate that. That's it. We've cleared our comments. It's been a fun conversation. Jamey, anything final you want to say before handing over to Bob to wrap up?
No, I think just thank everyone for the active comments. We were really hoping we get lots of questions because it makes it more fun for us. So thank you guys so much for sending a bunch of questions. And, Bob knows how to reach us after this too, if things come up.
That's right.
So Bob, sorry we gave you some questions, but
No, and with the amount of questions and both of your ability to respond to all those questions that came in is phenomenal. So great job. I want to thank both of you for your time. As far as the compensation, one of the questions was about the compensation. We just released that information just there's one that was just in the last week or two for compliance, and then another for in-house counsel. About a month
Bob,
ago.
I think your surveys are free too, which
Yes, that's correct. So you just go to our website and you'll find them under the insight section, which is the same area for the webinars. So it just in general, though, we want to continue to make this program as effective as possible. And I'm talking about the GC Advantage program. So we will be sending just an invite to everyone who joined us today to take a quick survey. It's just 1 minute survey to provide us feedback. We greatly appreciate you taking the time on that. And then, obviously, if there's any needs that where we can be of assistance, we've got Jamey's contact information here, my contact information, and we can pass along anything to Jason as well. So thanks again for everybody attending, and we look forward to seeing you next time here.
Everybody.
All right.